era is expected to bring higher interest rates for the US economy. So how could it affect a local business such as La Trobe Financial Asset Management? We'll find out now with Chief Investment Officer Chris Andrews, who's in our Melbourne studio. Chris, thanks for joining us.
Thanks for having me, Peter. Great to be back with you after a very interesting week in markets.
Yeah, without a doubt. Were you expecting a Trump victory?
Well, we sort of leave the politics and the punditry to others, but certainly from a markets perspective, it was a really interesting phenomenon. You know, we were observing it actually in the office during the day, and we saw peak to trough volatility on the share markets of 7% on an intraday basis, not just in the United States, but also here on the Australian bourse. That to us was incredible. I mean, you had markets positioning themselves, taking speculative bets, what amounted to speculative bets, on the outcome, firstly, of the US presidential election, and then of the effects of that election on local markets and economies. And really, to our mind, that was a really, really big stretch by the markets. And for individual investors, the question was, how could they even decipher what was going on, let alone position their portfolios for it?
Yep. Now, Chris, why don't you just explain so people understand what you guys do? Because you know, your business is about interest rates, isn't it?
It is, yes. No, we do loans to borrowers secured by mortgages. So what the target outcomes we deliver for investors are those sorts of uncorrelated, capital stable, low volatility investments that just pay reliable income regardless of the market noise of the sort that we saw during the US presidential election. That's what we attempted to deliver for our investors. And we've been very successful over 64 years.
Okay, well, obviously, few people expected Trump to win, and the consequences of the bond market has reacted, and the whole world is now saying America's heading towards higher interest rates. And I guess, what is your interpretation of the implications for interest rates here in Australia? And then we'll talk about how you think it will affect your business.
Yes, well, if you look at the short-term outlook, certainly markets prior to the election were only pricing in a 12% probability of an official cash rate decrease, and that dropped to a 5% probability post the Trump outcome. So certainly the markets are now starting to look like they're saying interest rate decreases are finished or are finishing, barring any shocks, of course, and we're going to be in a position perhaps where we slowly, perhaps painfully, move back towards normal interest rate settings. Now, I have to say, for investors who are expecting that process to happen in a short period, you know, they're in for a surprise. Certainly, given the levels of indebtedness across the world, including here in Australia, the return to normal interest rates on a best-case scenario is going to be close to a generational challenge. So for investors who are looking for yields from bonds, who are looking for yields from deposits, there is still going to be a long period of significant challenge ahead in our view.
Okay, so Chris, you know, your returns have been very good on a relative basis.
Yes.
But of course, people like you and me always say to people, well, if returns are good, the element of risk is always a little bit higher than a government bond or a term deposit. So explain what you guys do and how you manage that risk.
Yes. Well, because we take a very granular approach to our assets, we really very carefully assess on a loan-by-loan basis each and every loan that we write. Risk management is everything to us. So over our history, 64 years, we've never lost a cent of capital for our institutional investors or indeed for our retail investors in our pooled investment portfolios. And it's all about taking that very rigorous approach to assets, doing low LVR loans, creating very diversified portfolios, always taking a first-ranking mortgage over the security property, which is always here in Australia. That's the essence of the approach that's delivered, as I said, no capital losses for investors across our history, but also, you know, a real range of approaches for investors. So we have a classic 48-hour account that's paying 3.2% per annum, our 12-month term account delivering 5.2% per annum. We've got a 3-year offering paying 7%. And we've got Australia's largest and most robust peer-to-peer portfolio that pays a range of returns and allows investors to choose the asset, the yield profile, the duration profile that suits their own individual circumstances. So it's quite a comprehensive offering and one we're very proud of.
I think you should explain the peer-to-peer product. A lot of people wouldn't understand that.
Yes, of course, Peter. Well, peer-to-peer is where investors can invest, instead of investing in a portfolio of loans that we've put together, they can invest in an individual loan. The analogy, if you like, Peter, is instead of investing in a shares fund, to choose an individual stock on the share market. Obviously, that allows investors to really tailor their exposure to the asset class, to a duration profile, to a risk profile, to a target yield profile that suits their own circumstances and their own needs and objectives. So it adds a little bit of extra control to the investor, if you like.
Okay, mate. Well, thanks for joining us. I'll be very interested to see if your interest rate predictions work out. I've got to say, I pretty well agree with you. Thanks for joining us, Chris.
Yeah, thanks, Peter. Thanks for having me.
Cheers, mate. When we come back, US political expert Tom Switzer, no relation, will join me to evaluate Trump's political future and how Trumponomics will affect global economies and stock markets.